a guest. He's no other. This person, yeah, the first time I went on his Zoom call, literally, I was a beginner in trading. And I remember looking at this guy treating supply and demand right from basics. And afterwards, he was asked a question to do a top down analysis using supply and demand. And guess what? He took an entry of 1 minute time frame as sharp as possible. And I was literally marveled. How did he come up with all that? And this is the kind of knowledge today we are going to be introduced to. I believe some of you people have been shouting about it. Francis, how are you using supply and demand? What is this? What is that? I'm not a supply and demand trader. And Derek knows that I'm a very poor student of supply and demand. So he wouldn't even talk to me about it. But please, let's give in the chat box some ones, some fires, some twos, everything in the chat box as we welcome Derek Rickcapital on the Zoom session. Derek, my man, if you're on there, can you please unmute yourself? I'll give you the host, yeah?
Welcome,
Yes,
Derek. This is OJ.
yeah, good morning. Good morning, everyone.
Morning, sir. Where are you, Derek? Can you raise your hand for me? Yeah, I seen you. Good. You're the host.
All right. All right. Good morning, everyone. My name is Derek. Thank you, Francis. Thank you, Nana. Thank you, Mr. OJ, for
Yeah.
having me on here.
You're welcome, boss.
Yeah. So, the way I trade, Um, I'll just quickly talk about how I trade, basically. So, how I trade, I use supply and demand. That's like the foundation of my analysis. Supply and demand is like the foundation of my analysis. Then I also pay attention to structure and order flow. What I mean by order flow, because everyone knows structure, yeah? Structure is your high, low, lower, high. Then what I mean by order flow is basically me seeing the banks get into their positions. So you guys see something up here where I'm saying banks move price, right? So think about it this way: you as a trader, or we as traders, right? We are retail traders, and we only just make up like a small percentage of the financial market, right? Because we don't move price, we don't control price. Now, the people who control price, there are people who create price action, right? And those people are the banks. Now, from the basics, when we all learned about trading, we came across where they spoke about trading sessions. Like you have the Asian session, the London session, the New York session, the Sydney session, right? So think about it this way. Now, in these time zones, there are banks, right? There are central banks who have the control or the power to move price. So in the Asian session, there's always going to be the Asian banks who would move price, right? And then in the London session, there's always going to be the London banks who would move price as well, who would get into their positions. And I can show you all of this as well. It's not just I'm saying it, you would see it on the chart. There are also the New York sessions. They've also got the banks that open up the market and they get into the positions. So what they are doing is literally getting into supply and demand in the market. So wherever they enter is always off supply and demand zones, right? Wherever the banks are going to get into the positions for the day is always a supply and demand zone. And if you can actually learn how to read a supply and demand zone, you know, you just understand, you're going to understand the footprints of the banks. You're going to understand where the banks have decided that they want to make money for the day or for the week. If you're a swing trader, if you're a scalper, if you're an intraday trader, you should be able to understand the footprints of the banks because that's where you understand where supply and demand is. All right. So basically, the basics of supply and demand in general is for my points of interest, right? How I pick up my points of interest, which is a demand point of interest or a supply point of interest, which is entries, right? But not generally entries because I don't just pick it as an entry because I first off pick my point of interest and then I go into the small time frames to refine the point of interest to get the exact entry where I can have a small stop loss. All right, I'll take you through that as well. So I'm just trying to say that I have two things I look out for my points of interest. So one is either going to be a base candle, so based on the fact that we have just candlesticks on our charts, right? We don't have anything else to show us price action, but candlesticks. Now, I'm able to read every candlestick that I see. I'm able to distinguish between which candle is a true supply candle or a true demand candle. And I'm taking you through that as well. So I have base candles. Now, let me explain what a base candle is. Now, a base candle is a candlestick that has less body and more wicks. All right. So an example of that is, let me look for a candle like that. So this candle here in particular is a base candle, all right? Because it has less body, which is less high and less open and close of the market, and then more high and low of the market, because every candlestick has a high, open, low, close. Everyone knows that, right? So the ones I'm looking out for are the ones that have low, open, and close candles. So these are base candles, all right? Anyone that you see that has less body and more wicks, that's a base candle. All right. Now that's one. Now the second one I also look out for is institutional candles. Some people call them order blocks. Some people call them sponsored candles. But in the general term, it's just a buy to sell or sell to buy. All right. That's where. So say for example, if the banks want to buy, which is if they want to push price up, they have to sell it to their demand zone and then buy it from there. If they want to push price down, they have to buy to the supply zone and then drop it from there. Okay, so you're going to see that candle identified as the last buy to sell, which is where they had their last sell orders, their last buy orders before they now decided to dump it. And that automatically a supply zone because that's where they bought. So them buying up here, so let's say this is a supply, right? And this is S. So what the banks do is they have to buy to a level so they can drop it. And this is when they're about to get into the market. So say, for example, New York session opens and the New York banks want to take their position for the day, which is they want to sell price for the day, right? What they do is prior to the New York open, New York would already open. So sometimes you have what we call pre-New York sessions, right? So within that pre-New York session, which is like an hour before New York session, what usually happens is the banks are open, right? They open, they have to get to work. So see them as human beings. So they have to get to the office. They have to, open up the systems, turn up everything up, and they can't just do that when it's exactly New York open. They're gonna have to prepare ahead, and that's what you call pre-New York. So what these guys do is prior to when it's New York session, and the market, London maybe ended here. Sorry, New York maybe like they just go into the market somewhere here. What they do is they take control and then they have to push it up to that supply zone where they can take their positions for the day and then make their money for the day. Because they also want to make money. It's not only do they move price, but they also are trying to make money. Every movement in price, every decision that's made in price action is always for the bank's benefit. All right, whether it's to push it in the negative direction for a more positive direction or vice versa. So what they do is they push it up, get into the positions from a supply zone. So what you have there are buy orders before sell orders. Now, think about it this way. If you were a retail trader and you bought here at a supply, you would be in drawdown if price went down, isn't it? And that's the same thing the banks are going to have. So they're going to be in drawdowns, right? But they have a reason for pushing price in the downside. Now, it could be in the fact that, say, for example, price is bullish, right? Let's say price was bullish. So you have, let me clean this. So let's say, for example, the price was bullish, right? So you had something like this, okay? So we're in a bullish market and they only wanted to drop it so they can get into cheaper buys, which is a higher low to continue to go bullish, right? So they wouldn't really care because they know the exact reason why they're dropping the market, right? And the reason is because they want to get into demand since the structure is bullish, and then you have a demand zone. They get into a demand zone, which would have already been prepared here, and then they buy. So that way, even though they're in debt here, they did it for a reason so they can get into the positions for the next day and then pushing it up to clear out that debt. All right. Now, sometimes it could be Asian session who starts off the move. They get into the positions. They wait some time for London. London gets into buys. Then they make another retracement for New York. New York gets into buys. So New York can take out their debt. and then you have a continuation of structure. So what I do is basically I don't just use supply and demand. That's why I did this. I want you guys to understand that everything is a system, right? Think about it as a car. A car can function without a brake. It can function without a steering wheel. You can function with so many things. So the way I trade, I trade the foundation itself is the supply and demand, but there are other things that come in it. So I'll just be going through supply and demand basics, right? Since it's the foundation in general. By the way, I hope everything I've said made sense. And if anyone's got questions, you can ask me before I go on so I can answer any questions you have.
You can unmute yourself and ask the question before he continues, or in the chat box, please.
Okay. And that's why I also wrote this out here where I said, banks move price. And they do so by getting to the positions from demand and supply. Thereby, that way they create structure. Right. So the pair I want to use for, just to analyze stuff is Bitcoin. So basically on Bitcoin, I'll just be taking you guys over, to supply and demand zones. So I'll just go back in time. Okay. So the best place, the first key to supply and demand. Now this is the first key. I'm going to take notes of these keys because they're important. Now the first key to supply and demand and picking the right supply zone or the right demand zone, because the truth is, when you start going to the charts and start marking it, you're going to see supply and demand zones everywhere. All right, they're everywhere because that's why you have highs, lows, highs, lows, highs, lows. Every high and low of every candlestick is a supply and demand mitigation. Okay. So how do you get the right ones? How do you get the best ones? Because you don't want to have the ones to just give you small, except if you're a scalp trader anyways. But for me, because I like to swing trade, I like to get the best ones that will go for long. So how do you get the best supply and demand ones that will go for long? You do so by understanding one, structure. Okay. So you do so by understanding structure. Now, here's the key thing about structure, because now I have to go into structure to now explain why I'm talking about structure. So there is a strategy. I wouldn't say it's a fact, but is a strategy I use to understand structure in depth. Now, the strategy is this. I know that when price goes up, right, which it did here, price didn't go up straightforward, like it didn't just fly, right? It didn't do that. What did price do? Price went like this. Right? Now, because price went like this, we have to question that. Why did price go like this? Why didn't price just fly up? Now there's a reason behind this. The reason is you would notice that in this leg, price created minor structures. So what you have here are minor bullish structures. Okay, now these minor bullish structures are for the banks to get into the re-entries and positions for the day, to get into cheaper prices, to get into discount prices, to continue to push price, to present it to themselves so they can have discounts or more cheaper reasons to invest in the asset, right? And that's why you have them push price in the opposite direction so they can get into a more cheaper price, and they push it up again, making it available for, making it easy and very juicy for investors to invest in the asset. So what I can see that is there were minor structures as price moved up. Now, how do I identify these minor structures? First off, let's understand that I'm going to take out the most significant zone, which is right here. All right, the most significant retracement. Now, right here we have a high, and now here we have a high low. So therefore, we're bullish right here, isn't it? You have a high high, you have a high low. All right, and then watch what happens. Right, this is very interesting. Watch what happens. It means that here now every supply and demand zone is always at the high of a week and the low of the high of a move and the low of a move. Like I said, how did price initiate this move to the downside? It's simply because to the left hand side, right there, we don't have any data that would tell us that anyway, but just understand that on the left hand side here, maybe in the past or anything, that has automatically become a supply zone because that's what made price sell off the downside. And now price has bought here, and that's automatically become the demand zone because price bought in there. So the banks, I can see the bank's orders. The bank sold here, the banks bought here. Now the banks got back here, and you can see them sell off because they understand supply. They understand that that was a previous supply area or a previous supply level, and then they create a base. All right. Now a base is a decision which is usually made to break out of every supply or demand zone. Okay, if they want to continue to push price, they have to create something to break out of every holding supply or holding demand zone. And that's exactly what they've done here. So you have a base created, and then you have a candlestick break out that zone. Now, what happens next? Price understands this, that this was a previous supply level, which has now turned demand because there's no more supply there. It's been broken. So automatically, that's now become demand. And what you see happen there is they understand the footprints. And what do you see, guys? Price comes back there, and then you have buys again. And ever since price got there, price shot up to 20K or thereabout. All right. And that's because it is all just supply and demand, but you have to understand structure as well to flow along with it, you know. So I also, what I like to do when it comes to it, when it comes to, understanding structure in depth is this. I always know for a fact that where price is always going to make a retracement to if it wants to continue bullish is where there wasn't any discount price according to structure. Okay, now I know that I might be going too advanced for our understanding. Maybe if the people who are new to trading here, I
You
just
break
hope.
that. Can you break that down a little bit, please?
Okay, yeah, I knew it would be advanced. Okay, so here, this is what I mean. Now, why price starts to create structure, right, to push a price to the upside. They can't do it like this. If not, everyone would just buy and we will all be rich because price would never make any retracements down. So because they can't do that, they have to create structure. Now, in a moment where price creates structure, there's a fact, and the fact is every structure move that is complete has to make 50% retracement or more. Now, in a point where structure doesn't make any 50% retracement, understand that there's a very key reason for price to return back to that zone. Now, let's say this is a higher high, this is a higher low, this is a higher high, this is a higher low, right? Price made a 50% retracement. You can see we made more than 50% retracement, right? So therefore, this structure move is complete. Now, price doesn't have to make a retracement back down here. If the only reason if price violates this low, it means that price is going to violate every single low and price is going to fall because there's nothing to sustain it. Now, in a case where price goes up like this and doesn't come back 50% and just creates something like this and continues bullish, understand that price for a fact is going to come back down here because it sees these zones as unmitigated discount prices, fresh discount prices that they can come back in the future and get back into the discount prices here, and then when they do so, they can buy to continue bullish because there are fresh discount prices there. All right. Now you're going to see the same thing happen with Bitcoin here. And it happens every single chart. It happens in every single price, every single pair. Okay. So you have a high right there. And of course, it's a high because it gave us a significant retracement, right? So now it's about checking out. Now this is the high low, isn't it? It's the high low. High low return to the zone of supply, return demand, and then you can check it if it's a true retracement. Of course, it's a true retracement because it's below 50%. There's no reason for price to come back here except price wants to drop to zero. Okay. Now, watch out what happens next. Price goes up, we break structure, we go bullish, right? So I would say that this is the high right here. If you go into the weekly, you would know that's the high, right? Now, the question is, the price give us any 50% retracement. Is this 50% retracement or not? Let's find out. So you see how it barely just tapped the 50. Now, in the case where it barely, and especially when it doesn't even return to this supply zone, which is this, okay? This was the supply zone. Because that's where the bank's going to the orders at the structure high to push it down. So in the case where price doesn't ever return to the zones, understand that that is now a void. that is not a reason for price to come back to that area. Okay, there's a reason why price can now come back into these demand zones and buy. And guys, where's our new demand zone? The new demand zone is right here, which is where structure was created, which is where they go into the buys. Now, what do you guys see? Price returns back into that zone, and that's where you have buys. So literally, you would know at the back of your hand that the banks are going to get in here and they're going to mitigate 50, 61.8 area discount prices. And that's where you can invest in the assets, because then this is the only unmitigated demand right here, right? And then they buy and they push price up, and then price goes bullish. Okay, so this is like one way that I always try to understand where I have the best supply and demand zones. I'm always going to get the best supply and demand zone whenever in the structure leg, I have to figure out where did price not give any 50% retracement. So therefore, if there's no 50 retracement, if there's no 50% retracement, especially back into the supply zone that was broken as well, then there's a very strong reason for price to return back there, of a price to buy again from that zone. I don't know if this made sense. Did it make sense, guys?
You can put 2 in the chat box if it makes sense, please. If you have any question also, you can ask.
Meeting.
Okay,
Derek, please,
Derek.
Derek, can you go through it again? I'm just a bit confused about the 50%. When you said 50%, because how I understand it is a fresh demand area.
Yeah.
Obviously, I have knowledge of demand and supply. So how me I used to look at it is, if it's 50% or below, that area has been completely filled up. That's no return. However, if it's on a higher time frame, above that time frame, it may not be 50%. So that becomes a bit of a confusion for me. So I'm just trying to figure out, does that rule apply to the time frame, your higher time frame going backwards, or lower time frame going higher? So I'm a bit confused with that, please.
Okay. All right. So one thing, yeah, and I get why you can get confused, because time frame is an illusion. You know, time is always an illusion. So they just present the illusion for us. So the time frames are fractals, right? And the fractals happen like this. It's like a spiral, which is a fraction of itself. So the more you keep digging into the small time frames, the more you get lost. And that's exactly what they want you to do. They want you to get lost. They want you to get confused. So you have to understand that it's the higher time frames that's the main thing in the market. The only reason why you should go into the small time frames to look at anything concerning structure or supply and demand or whatever it is just to get an entry. That's the only reason why you should be on the 1 minute, the 15-minute, the 5-minute. Those time zones, they're only for entries, which is entries to reduce risk. All right. But you should do your analysis. Everything you're analyzing on the chart should be on the higher time frames. And the higher time frames, I mean the daily, the monthly, and the weekly. And that's it. You know, because these are the things that are going to push price in the long term. All right. Prices, everything about trading is long term. It's never about the short term. So whatever analysis you're doing should always be on the long term. You know, because that should be the foundation, or whatever the small time frames are going to rely on. Whatever the high time frame says, the small time frame is going to do it according to the high time frames. So basically, when I'm looking at structure or 50% or whatever, I'm doing it from the daily, weekly, and the monthly, and I don't go below it. All right. I'm always doing it on the daily, weekly, and the monthly. So here, I'm not sure if I can go in the daily if the charts will allow me, because I'm in the replay mode. But let's see. Okay, perfect. It did. So I just want to see if there's a way I can, explain the structure a lot more for you. All right, perfect. So let me take out that previous supply. And this is demand, right? So basically, we start with structure right here. I'm doing this. Let me do this on the daily, and this is structure. So structure high, high, structure high, low, right? And there's some sort of reaccumulation if you do week off right here. Now up here, supply gets broken. And you can see supply get mitigated as well, because, this candle is an institutional candle, right? And if you guys remember what I started off, I said, whenever the banks want to sell or push price in a negative direction, they buy to sell it. So this is the buy candle, right? And that's the sell, that's the supply. So automatically that's now become a supply zone. And that's why you see price getting to the 50% that you have rejections. They get back there, you have rejections until they're done rejecting, and then there's a complete breakout. Now, price understands that demand has broken supply, so therefore price can return back to that region and you can have buys show up in the market. Okay? You can have buys show up in the market next time. So the question is, did this give a 50% retracement? Yes, it did. So therefore, this is a complete move. So we continue the movement, and then we continue upwards. So we have the next supply, right? This is the next supply level. This is the next sell to buy. Let's mark it up. Okay, you can see how we get there. We mitigate, we reject, and next thing is a breakout, right? Now, price never returned back here when it gave us this higher high. It never returned back into this region. Instead, it just made a low. Now, let's find out, is it a complete retracement or not? All right, so you see that we barely just tapped 50, all right? The barely just tapped 50. Now, whenever I see something like this, I always just call it liquidity. I never ever say this is a complete 50% retracement. For me, it's just liquidity. All right, so therefore the move is incomplete. Now, price continues to go bullish, and then as it continues to go bullish here, there's minor structure points. So all these highs and lows, all these minor highs and lows are very, very important, because these are higher highs and higher lows to sustain this bullish movement. These are all just higher highs and higher lows. These are higher highs and higher lows. And at this point, you don't really care if it's 50% anymore, because you now have the one that never returned to the supply. The price never returned to the supply. So there's fresh demand here, right? And you have higher highs, you have higher lows, you have higher highs, you have higher lows. And this is what I call minor structure. You have higher highs, and then just as minor structure breaks, what do you see happen? You have a lower low, and that's why price makes a retracement to a lower high, 50%. Okay, and then price shorts. Now, not only did price make a 50 retracement, but price showed us supply and demand here as well. And I'll show you guys how. Price reacted from a supply level to sell here, and it's very simple. And I'll show you how. Remember how I said this is minor structure, right? So this would be a lower low, sorry, a higher low, and this would be the higher high, right? So now here we have demand. Right? Now, why is it that price didn't continue the structure here, and why is it that price broke structure here? This basically is trying to tell me that supply is now in control, because demand has now been broken. Not only was demand broken, but structure was broken. Therefore, this is the sign that price is ready to fall. All right. Now, where's the last supply going to be? It's obviously going to be in the last buy to sell right here, because there was a mitigation, quite all right. But then why did this candle come up here and then we had the break? Is because price decided to create a new supply zone there, which if I go into the fractals, you would see. I'm not sure if I can go, if it will show me, but let's see. Okay. If you go into the fractals, you'll be able to figure out the supply zone. But remember what I told you guys about supply and demand. It's always how I pick my POI is either a base or a buy to sell candle. Now, what I can see here, just prior to the main break, is a base, right? So in my opinion, that is the decision made for price to short. And that's why you see price reject back in there. You have sells, but it didn't break the lower low. So it went back to fully mitigate that supply. Therefore, it was time to now break the lower low and then start the bearish trend. Okay, so in this case, I would know for a fact the price is now going bearish. Why? Because minor structure was broken. This is 50% retracement, quite all right. So it's now time to retrace back to where we didn't have any clean demand. All right, and then I'll be expecting price to get back in here for buys. And you can see price just go lower, 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 high, lower, 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 high. Just continues to go bearish until it returns back to the demand area that wasn't tapped. So how do I get the demand? It's simple. Where was the last buy to sell candle? You know, the last buy to sell candle, the last sell to buy rather, is this one, and then price just bought. So basically, that would now be new demand. Okay, and you have equal lows. You can call liquidity or whatever, and you can expect some price to return back into that zone, and then you have price buy from that zone because it is demand. You can also reduce it and expect them to buy from 50, 61 to 8 region, and there you go, entries, and price goes bullish. Okay, now it got to a point where you guys, if you guys remember, price got to about 13K and sold off back to 4K to buy. Now there's a reason, right? And it's simply because of the structure rule, which is whenever you see that price doesn't make any 50% retracement of structure, understand that that is a void. So let's find out where that happened here. Now remember, this is now a lower high, and since price broke this low, that's now become our lower low, right? So did we give any 50% retracement of this lower high and low? No, we didn't, because price barely even mitigated 50. So therefore, that now tells me that there is a mitigation. There's a void. Now, where's the void prior to that low? It's this base, because you have price all of a sudden just buy here. Now there's a reason anyways. It's because there's demand here, order flow. There's demand here, order flow. There's demand here, order flow. And then the order flow breaks right there, where you have a buy to sell and you have a base. Therefore, that automatically becomes supply zone, because that broke every demand order flow that was supposed to, hold structure bullish or whatever. And then that base was the decision created to then break out. And you can see the momentum, very nice. And price never returned to 50% of the structure. So you could say that price would get there in the future, mitigate it, and we'll have sales again. And I just do this to understand the high time frame and understand the banks and how they're trying to move the price. So watch out what happens. Let me play this. Do you see it? Very nice. Very nice mitigation. Price sells. All right. It's as simple as that, because it's all supply and demand. And supply and demand is the foundation of what moves price. And you also have to understand the source of that structure, which I've given you guys, which is you just have to understand that whenever there isn't any 50% retracement in the structure leg, that is a fresh supply or demand zone at the higher time frames, and price can use it and create a macro movement in the market. So basically, we definitely should understand what the higher time frame structure here is saying, which is we're bullish, we've created a higher high, we're now creating a pullback, I've mitigated off the next demand. So what's the next thing? The next thing is to break at the high, right? Because we only came back here to mitigate where we had unmitigated demand. And the next reason is to break the high of the high. Now, the only reason why price is rejected here is simply because that is a valid supply zone, and it's a reason to create a macro movement. Okay, so price creates that. Now, in the case where I'm seeing this, my head is telling me one thing. Let's go back to that topic. And what's telling me is, let me go to the weekly, is that price is definitely going to come back to wherever it didn't give any 50% retracement again on this movement. It's that simple. All right. So let's go to daily now, and then I can follow the movement. So the movement here, literally, when price mitigated our region, we had a high, we had a low. This is 50% retracement. I don't need to even draw it, but it's 50% retracement, isn't it? Now price went up, but it has to break this high before I now say, yeah, it's a high. So our current structure is high, low, and then we break the structure, right? Now, when we broke the structure, understand that that is supply. Okay, and that's why you see price gets there, sells, price gets there, sells, price got there. We created 2 decisions before we broke up. So basically, that in my head is the next demand zone. Okay. Like I said, I use these base candles as POIs or points of interest for buyers and whatever, something like that. So in the future, I'll be expecting price to come back towards these areas for buyers, because When it went up, it never made any 50% retracement back down here. So therefore, this is my next unmitigated demand zone. All right. So let's see the price come back here to buy. And when I get into buys here, obviously my TP would be 20K, which is the new high because we're bullish. All right. And you see price, we mitigate that demand and price free up. And the rest is history. Okay. And the rest is history. So that is like the foundation of supply and demand in general, like how I read supply and demand. It has to deal with, understanding structure, most importantly, and then understanding where you have unmitigated 50% zones, and then getting into entries and all of that is quite, it's quite simple. But I'm not really going to go deep into that today, anyways, because of time. So, but this is the foundation of supply and demand, and it works best on the hard time frame. And you obviously want to do it on the hard time frame to avoid trading every single day, to trade less, and to have a much more better understanding about price action and the movement of price in general. So yeah, guys. Any questions?
Fantastic.
So, this also tells us something, right? Whatever's happened here, you can now also understand what you should be expecting in the future. There's obviously unlimited demand zones here because they at this point here, price never made any 50% adjustments around here. So you know for a fact that in the future, it's going to come back here. And it's going to come back here when it breaks whatever minor structure is holding it right now. So when you go to the daily, price is bullish here. We know that. Now, when we go to daily, we have what you call higher high and higher low. All right. Now, currently, this is what's sustaining Bitcoin from going bullish. The moment this low breaks, Bitcoin is going to dump. All right. And it's going to dump back to where you have unmitigated demand zones. And then that's when you can invest in Bitcoin again. All right. It's simply just understanding structure, understanding where the banks never made any retracement to get into cheaper prices. So therefore, they're going to get back into that zone in the future because that's where they can have cheaper prices and reasons to now get back into the market and buy it again. All right. So it's supply and demand structure. Yeah.
To go back up.
Someone say something?
Somebody is asking, could we use the 4 hours to determine structure?
Yeah, you can. And you have to understand that whatever it is you're doing, do it under the circumstance that you already have the daily, the weekly, and the monthly all marked up. Because you have to, whatever you're doing on the 4 hour has to be in line with what the daily, the weekly, and the monthly is saying. You can. I do that as well. And that's going to be in like in a more advanced way where I have to teach you how to navigate, time frames. You have to understand how to navigate the time frames and how to read structure, small time frames and all of that. But that's like more, going into advanced stuff.
So somebody is also asking, would you keep buying Bitcoin or wait for the dump to buy out?
Okay. Right now, you can't do anything right now because now price is at the higher high and it's risky to buy price when it's a higher high because now in the banks are not interested in buying this anymore. Whatever is going to continue to push price is fundamentals, which is new events, people who are still buying Bitcoin right now, people who are transacting in Bitcoin right now, which is going to create demand, right? So in the market right now, you can't do anything. Right? You can't do anything. You can't do anything in the market right now because price is high. The only thing you can do is for price to make a retracement back to this leg. All right, this is now a leg. This has now become a leg, right? So if this is a leg, It means that in the fractals, say the 15 minutes, let's go to the 1 hour. So I'm giving you this just for free, right? So in the 1 hour here, there is a structure, all right? Like I said, every single leg has structure. Structure is key. Structure is the basis of price, right? Because that's where the banks create the orders. That's where the banks get into the orders. So this is structure right now. Now, if this is structure, what do we have? The structure, we have a low, we have a high. Because this then broke this high, because the previous were high. So that's a break of structure. So this is now the indication that, yeah, I can now buy price, and it has to be 50% or less. Yeah. So now, having that understanding that, yeah, I can now buy price, it's like, so where's demand? So this is a demand zone. Because remember what I told you about demand and supply? It's always, a drop to a sell to buy, which is what you have here. All right, and then price comes back there, 50%. So even if I didn't want to buy here, I'd wait for this minor structure to break, and then I can buy retracement like this one, and then that's how I can invest and buy Bitcoin like this. Buy. Now, I follow the structure and I say, this is the break of the higher high, right? So therefore, this is the higher low. Price broke this higher high right here. So we started to create more minor structures and never made any retracement back here. So we have higher high, we have higher low, but this isn't 50%. So therefore, when price comes back here, it could be the next higher low where I can now buy Bitcoin again, which is around 50K. Okay? And that's how you do it. That makes sense?
Yeah.
You just have to watch out for the void where there's fresh discount. And whenever there's fresh discount, this is where there's fresh discount. So anywhere from here, any demand zone that looks nice to them, they will buy from it. Because this is where the next almost get a 50% zone is. And that's how I do it.
Is it possible if we can run a top-down analysis on any pair for us, please?
Okay. Wow, 60K, beautiful. Uh,
Or you can ask the team whatever pair they like. You
yeah, for
can
sure. You guys tell me what page you want, what pen you want to go.
any.
I want the
Everybody.
naira. I want
ev-
the naira to the US to the pound. If you can find it, I have something. I mean, it's a for personal interests.
All right. So most of the people are saying gold and euro USD. So you can choose one of them and then do it.
Okay.
Yeah.
So the pair I like to trade the most is gold anyway.
All right.
That's actually the only pair I trade anyway. So this week, this week is gold really finessed me. Finessed a lot of my entries. And that's okay. Yeah. I just choose one. All right, let me use the Fed. Let me try.
So somebody is saying, can you please get closer to the mic because you're
Okay.
sometimes a little bit low. Yeah.
Okay. Yeah. You guys can also go back and so this is what I mean because people might be asking what do I mean by how do I see the banks get to the orders? So this is just a rough walk or a rough analysis, but I'm not going to go into that in this part. It's just a little bit of source that I can
Don't
share.
tell me you took all those trades.
Yeah, going to sales. I was just selling like last 2 weeks. Last 2 weeks I've been selling all of this basically. So I was trying to get into the buys, and the buys have just been missing me out. It's just been frustrating. It's fine. But yeah, so this is how I'm able to know when the banks get into the entry and the order, and then I apply with supply and demand. So I have this, I don't know what you call it, sessions. So on sessions, you'll be able to see how London comes to the market, they get into the entry from supply. New York comes in, they get into the entry from supply. The next day, London comes in, they get into the entry from supply. New York comes in, they get into the entries. Um, Asian, London, New York, supply. It's just order flow. You know, something you guys can go back test and stuff. And it's just out of here. Yeah. Now, top analysis for gold. So this is the monthly time frame. Okay. Now, structure. Structure is always going to tell me where the best supply and demand zones could come up from, right? So this is a leg. This is one leg to the upside. Now, what's happened is price has made a retracement back down and price has broken that leg, right? So that means that whatever analysis I'm going to do right now, it has to be in line with whatever structure is showing up. Because structure is now telling me that what? We're bullish, right? So this is the higher low. So if we're bullish and this is the higher low, then I don't need to look at anything that's below here. I have no reason to pay attention to what's below here. Okay. So what I have to pay attention to is what's here to here. All right, and that's where my focus comes in. So basically, let's continue. Now, this is my higher low. This is my current trading range. Higher low, higher high. All right, that's my current trading range. Now let's go on. Let's go into daily. And the reason why I'm going to daily is because I want to look at structure. Perfect. So here we go. Now this is our low. Price broke the minor structure. Therefore, that's the first sign that we're going to go bullish. So therefore, we have a high high. But then price never made any 50% retracement. Now, did price come back here? Yes, price did. Why did price come back here? Price came back here because this is a void. There wasn't any 50% retracement. So when it got to a point where it had overbought, he made the retracement back down to get 50% retracement and then continue to sell up, to buy up. Therefore, this is now my higher high. And this is now my higher low. The higher low obviously bought with respect to supply and demand. Now you can see that when we're creating the structure points, we had, although this is, whatever I'm going to show you guys now is advanced supply and demand. Anyways, so this was a supply area before. Remember, you're always going to get the best supply and demand zones according to structure. So price broke here, this became the supply. You can see rejection, and see it was time to break. And then you have a sell to buy, which should be a demand zone, something of that nature. And that's why you have to come back into that zone for buys. All right. So high, 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 low, expecting price to fully break out the high. So price stalls, comes back for an unmitigated 50% zone because when it started to create minor structures, it didn't make any 50% retracement. So it comes back down for more buys. But then let's remember that we're still on the high time frame. So we break this high. Let's mark it up. Okay. Now that we've broken the high, this is not a high low. This is a high high. This is a high low. Now this is now a low that fully made 50% retracement. So therefore, there's nothing to look at underneath here again. Now, one thing to pay attention to is the fact that everything in here is a void. Everything in here is a new discount price, a new unmitigated zone. Because when price made a high high, which was this high, price never made any retracement back down here. Therefore, in the future, if gold ever comes back down here, I'll be looking to buy gold in the long term. I don't know if that makes sense. Whenever price of gold comes back down here, I'll be looking to buy gold. And I'll be looking to TP at 2075. Okay, or 2078 or whatever. So now, let's follow minor structure, current minor structure. So now we have a higher high. We have a higher low. We have a higher high. Price goes up. And watch how price never broke this low because it wanted to continue to go bullish and break out. And that's why price would make sure that it sustains the bullish structure. Okay, so price goes bullish, we create a new high. Price makes a retracement back down to the next demand zone, which obviously is where structure is created. Like I said, you're always going to get the best demand of supply zone from where structure is created. Okay, and price comes back there, that automatically becomes high, low, price goes up. So in this case, it doesn't matter if they don't make a 50% retracement anymore, because you have the main zone, which is here, which is where we're interested in. Okay. So whatever you have to mark up here, just understand that it's all minor structure. So minor structure, high, high, low, minor structure, high, high, minor structure, high, low. It goes on and on, minor structure, high, high. Even the smallest of structures are very important. Minor structure, high, 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 low. And then you have a break, right? Even of that one. And that's the sign. Just as you guys saw me do on Bitcoin, right? That's a sign that we're going to go bearish. Now you have a lower low, lower high, price breaks, lower low, lower high, price breaks, lower low, lower high. And you can see wherever the lower highs are always making the retracements back to. It's always towards the supply zone. All right. This would have been a very nice. I was going to get in here, but I didn't set the limits because this movement was very quick and that's how I missed it. But I took all the sales anyways. So you can see that price always returning back to the supply zone where structure is created, where you have, almost get it out of.
We can't hear you, please, Derek.
Oh, sorry. I covered my mic. But you guys can hear me now, right?
Oh,
Am I loud enough, please? Just so I
yeah,
don't
it's
know.
good now. It's good for now.
All right.
Thank you.
Yes, yes, yes.
Okay, so the reasons why you see everything here is just order flow, supply, 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 and structure, right? Supply and demand structure, and that's how I trade, because it's very easy to trade like this, right? It's very simple and it's very straightforward. So right now, our current lower low and high is this low and this high. So I always have I have another rule. Now the rule is whenever I see that the trend or the structure that's sustaining my leg, right? Because right now this is the leg, this is the bullish leg, isn't it? This low to this high is the current bullish leg. Now, the moment I see whatever that's sustaining it break, that just tells me that it's due for retracement. So currently, gold is due for retracement. All right. So this now tells me that we're lower low, lower high. Now, automatically, this is a lower low. Now, the reason why it says it's a lower low is because in the fractals, price has broken whatever minor trend was sustaining it till it got here. And now it has broken it and is ready for 50% retracement. Okay, so we have high, we have low, we don't have 50. So we're going back to 50. So we're bullish right now until we get to 50. Now, how do I know where to sell or where to have my lower high from when we get there? It's simple. Where did we not have 50% retracement according to structure? Right here, which is where you can call it imbalance. A lot of people would say, oh, you came here because of imbalance. Nah, it's not because of imbalance. Because of the fact that you didn't have retracement, it didn't have any 50% retracement. So whenever I get to buy anywhere around here, I'm going to get to buy next week anyways. And that's fine because I'm still going to have, a lot of pips to catch. So it's cool. So I'm going to buy all the way to the zones. And then when I get here, I will prepare for a sell. All right. I'll prepare for my lower high, possibly maybe this base because it has a nice momentum. And then when price gets there, I would sell. And when I sell, I would sell all the way to the zone, which is around 1300s. And then when I get here, I would buy. So like I said, this is how I like to trade, and it's more like swing trade. So going into next week, I'll be looking for buys, and I'm buying all the way to here. And then when price gets here, I'll be looking for sales. So it's about following structure and following supply and demand, basically. Do you just set limits or do you wait? Sometimes I set limits, and the only reason why I set limits is if my risk is defined. Because I don't like to risk too much in gold. So like the max I can risk on gold is about 10 pips. If the worst case scenario, 15 pips, but I don't really like 15 pips, but 10 pips or less. So if I have like a 10 pip stop loss zone, I can set limits without flinching. I can just set a limit. And then if the risk is too much, if the POI is too much, like maybe 30 pips, then I would wait for mitigation first, and then I'll follow the price action according to structure in the fractals, and then get into re-entry where I can possibly reduce my risk. because I don't like to lose too much in the trade. So that's it. That's how I do it. Yeah. So that's like what I mean. Are you on IG? Yeah, I'm on IG. I don't know. Would you guys permit me to put my IG or whatever here? I'm Francis. Do you permit me to put my IG?
100%. Just dump it there. Go follow him, guys. Share some love. The only thing is you're not gonna get any live trade from his IG because you need to pay to get it. he's
That's
the
not
rich he's the richest man among our crew, so you need to pay before you get it. But yeah, his name is Derek, and the IG is up there. You can make it a little bit bigger, Derek.
okay.
Yeah. All right. Thank you so much. I don't know if anybody's got any more questions for him before we finish it off today. I think we've nearly spent almost an hour, and he's been on talking and talking and talking. So if there are no more questions, well, let's leave about 5 minutes, literally, for Q&A, questions and answers. Anyway, guys, feel free, unmute yourself and let's talk. So somebody's asking, will you come back again, Derek?
I want to answer the one for Derek.
Yeah.
Yes.
No, stop.
Okay, I'll stop. But I wanted to answer for Derek. If Derek permits me, I'll answer for him.
Yeah, of course you can answer.
Yeah, he'll come back if you pay him.
Okay. Yeah.
There you go. I knew that was coming. But yeah, it is. Like, I have so much respect for Derek, and trust me, guys, you can't get what he does. Like, sometimes I get marveled about the kind of trades that he pulls. He analyzes charts in a monthly time frame and take a trade with 3 pip stop loss. A swing trade with 3 pip stop loss. So this is what Nana was talking about. To every level, there is another level. And it is about staying humble, and he's really, really humble. He just doesn't show it off or tell any people, this is what I do. I did that. I did. You wouldn't even see. How many of you on this call did know Derek before he came? He came onto the Zoom call. Nobody knew him, right? And this is what I'm saying, guys. If you get a little knowledge, please let the social media rest a little bit, because there are so many good people out there who are so quiet, right? Where do you teach? Is there a website? Yeah, but you can message Derek backdoor when it comes to this one on his IG 100%, and you can talk to him about what he does. His analysis was so detailed. Thank you so much. Thank you so much, Nicole. Any other passing, guys? Feel free. Let's show him some love. Let's show him some love.
Derek, me, I'm relocating to Nigeria next week, so just give me I have.
Yeah, I'm here. I'm in Nigeria. If you relocate me, I want to leave Nigeria. I don't want to stay in Nigeria.
Come on, come to London then.
Come, we have spare houses for you. I have houses in the East London here. We can get a place. Come and stay. The closer, the better.
Yeah.
Derek, be careful when the Londoners offer you something for free. There's a catch to it.
Yeah. What are you trying to say, Nana?
Okay.
Are you not in London, Nana?
Well, he's because he knows the catch, doesn't he?
Yeah, someone is asking if I'm in Lagos. Yeah, I'm in Lagos.
But yeah, for now we'll keep the Legos out of the show, because we don't want people going to chase Derek and knocking at his door. Please, guys, let him rest. At least give him that sort of message on Telegram. Let him know your commitment to what you want him to offer you, and yeah, from there you can take it from there. But please, 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 do not go and be knocking at his door, because he
It's
did
a
say
joke, oh, please, oh.
he lives in Lagos. Yeah, thank you so much, guys, for jumping on the call. I don't know if any other people. There are some more
Francis,
questions.
I had a quick question.
Yeah, go ahead,
Okay.
please.
So Rick, this is how I understand it. Basically, we're going to go into the higher time. If we're marking up our charts, we're going to go into the higher time frames for monthly, weekly, daily.
Yeah.
And what we're going to do is identify the trend for the higher highs, higher lows, or lower highs, lower lows, where it's failed to, where the market's failed to had a 50% retracement.
Yeah.
We're going to have that as our point of interest at where we expect the market to bounce back from, right? So when in this particular case with gold, what all we're doing is we've identified the 50% retracement area that it failed to make. Once it's at a break of structure on the high time frame, we're going to use that as a point of interest for it to basically trade into the 50% area.
Exactly.
And then we're going to buy it back on that 50%, and that's it.
Exactly.
And the other question that I just wanted to ask you, because a lot of you spoke about sessions. So when we enter these trades, are you always looking at hour before the session to, once it comes to your point of interest?
Okay, let me do that for you. All right, let me just go over that. So to do this, I have to go into the small time frames anyways. So I'll go to daily. Okay, so this was the former supply zone, right? Remember, that's the structure, that's the high, and that's why you see we're having bias of that. Okay, because it was a demand, it's now a demand zone that broke supply. That's why you have that. Like I said, you're always going to get the best demand and supply zones like this from structure points. So we have that from demand. In my own case, I was able to minimize it anyway, because this was high, this was a higher low. So this is the new demand, and that's why you bought from here. So basically, now how would I gain to this buy, right? Let's put it that way. How would I gain to this entry? Now here's how I do it. So first off, because I like to be accurate, so I just do it like this. Since this is our structure point, perfect. Now this is the higher low, right? So therefore, we're going to get into the discount price of the area. So we have something like this.
Okay, yeah.
Okay, and you can see how neatly we tapped up 50%. I would have literally just had my entry up to 50% anyways, but I didn't do that because it's just a big pool of money. It's a big pool of stop loss, and I don't really like to have big stop losses anyways. So that happened. Now all I'll be doing is looking out for the retracement, and we're speaking about seeing the banks and their footprints. And all. Here's how it is. So you go into the 1 hour. I actually love the 15-minute time frame. So go into the 15-minute time frame, right? And this is interesting. What your price did here. So basically in the 15-minute time frame, let me have the sessions out, allocation sessions out. Okay. So market got in there, and this is London closure. All right, this is what I call London closure, but still within the New York session. Now the banks, let me take this off. Sorry, I have to take this. I wanted to clean out this, but I'll just leave it anyways. So the market closes for the day, right? Now imagine as a trader, right? You are looking at for the price action from your demand and trying to see, follow with structure and all, trying to understand, is it ready to buy, right? Is it ready? How am I sure that is ideal to get to a buy here? All right. Now understand that the candlestick that got in here is the candle that has the order, that has the demand order. All right. So this is the exact candlestick. This one right here. Okay, that's the order that the banks go into the entries. And this is New York get into a position. So New York has gone into a buy right here. So you have it marked up, and you can say NY buy. Okay. Now, New York was bought here. They've pushed it up. Now, who's next? Market closes for the day, right? Who's next? Who comes up after New York session is closed? It's Asian session. Now, how are the Asian session going to make money for the day? All right. they're going to want to buy, isn't it? Since they now want to push price bullish. So what they do is price is too high when it was Asian session, right? So they had to sell it to buy, and they had to sell it back towards that zone, right? And they literally, again, this is advanced, right? This is more advanced than some of my sources. So they had to sell it to the opening price, which New York did, the closing price rather, because this is the opening price, this is the closing price. When you come here, you have whole HLC. So if you click on the candle, it tells you what price this was. This was 1680.29, right? So just click on the candle and look above there and you see the closing price. It says 1680.30 thereabouts. It's the same thing, all right? And that's how you know where they can buy from. So they bought from closing price, took out liquidity, and they're going to the interest. And that was the next entry point. Now, this is who? This is Asian session. Okay. Again, the banks move price. So they get in, New York got in, Asian got in. Who's next? London, right? So they had to buy all the way up somewhere around here. And again, attention to structure, okay? Everything has to do with structure. So this was the most significant lower high, right? And that high was taken at New York open. Okay? That high was taken at New York open. So New York was in debt here, right? The New York session, this is the last place where they're in debt because now they're in the opposite trend and New York is already in the buy. So it's okay for New York to break out.
والله يا صاحبي بس بناك هذا يقول
So it's okay for New York to break out the debt, right? Now London has to get into the buys before that happens. So they then get in there, right? And it's just supply and demand. Like I said, you're always going to get the best supply and demand zones from structure points. So you have this was the supply, and then you have mitigation of the 50. Then they create the order, and that's London. So London bought an R before it was London open, all right? And now you can see New York, Asian, and London in the market, and they've broken whatever was holding it, whatever debt they were in. They had to even break the Asians out, and therefore you now understand that it's bullish, price is gonna go bullish. So it's like in this case, I don't really like to go deep into what is 50% zone, blah blah blah, or you can do it, all right? But you have to understand that while doing it, you wouldn't have to break. Banks wouldn't want to break even on their order, because the banks, London was in the buy here. So wherever retracement happens, you don't want to buy from anything below it, because if you buy from anything below it, then you're trying to break even on the bank's entries. So with the banks do as well. They wouldn't want to break even on their positions, which is supposed to push price all the way up. All right. So therefore, you have to understand what else has been unmitigated. We have this supply, this demand, rather. It's fresh, unmitigated, untapped, whatever. And what happens is those were the buys on Fridays. And that was literally it, because they don't want to break even on the entries. And then New York bought here, London and New York bought here, literally. So you have London, and you have NY buys. All right. So who's next? Asian session. I think maybe next week Asians or London and New York are gonna buy low, right? So the possibly will drop it to buy lower, and you have yourself a bullish movement to the upside. So this is how I like to be priced, when it comes to the whole thing. It's just about watching out for the footprints, blah blah blah. And it is what it is. I hope that makes sense.
Wow, Derek, I just wanted to say, really, really appreciate your time today in session, mate. That was amazing.
You're welcome.
Yeah, thank you.
Are we being surprised?
The level of detail you go into, is crazy. It's amazing. Considering that I have an idea of demand and supply. You go like, it's like looking for a needle in a haystack, to be honest with you. That's how I feel like you just like go. It's amazing. I really appreciate it.
You're welcome.
It's as simple as that. I can see lots of people saying we want him to come again. We want him to come again. The next deal will be with Nana. I managed to get you a free deal.
I'm always here, PR for Derek. So reach out to me, but make sure you come with your bank details and your checks and what have you.
I managed to get you a free deal, which I don't know. I don't know how Derek said yes to it, but yeah, luckily I got him on this call. But guys, there isn't enough. There isn't much I can say really to appreciate what you've done. Can we put some fires in the chat box to show some sort of appreciation for Derek, please? Some fires, some fives. Come on. Let's dump some fires in there. Five. So Derek, these are all for you. These are all for you. We really appreciate what you've done. Like literally,
that is a 10.
Literally, you've blown the market. You've opened our eyes to something that we've never seen before. And literally, it's just shocking. And in as much as we wish we can have you back again, seriously, yeah, we'll debate on that. We'll talk about it back though, yeah?
Yeah, for sure.
Yeah. Okay. So guys, I'd like to thank each and every one of you for jumping on the call. That would be it for today. And hopefully